everyone, and welcome to the Deep Dive. Today we're diving deep into the multifamily housing market.
Ooh, exciting.
Yeah, so we'll be looking at Larry Raymond's recent interview where he talks all about multifamily housing as an investment opportunity.
Sounds good.
Yeah, it's a really interesting topic, and I think this is something that, most people, when they think about real estate, they think about, buying a house.
Right, a single-family home.
Yeah, you're going to buy a single-family home, but this is like a whole nother world.
Oh, yeah, for sure.
Like a whole nother way of thinking about real estate.
Yes,
so this is not just about finding a place to live. This is about understanding like $1 trillion asset class and how it could be a really interesting investment.
Huge. Yeah, that's right.
So let's start with the basics. What exactly is multifamily housing?
So multifamily housing, it's broader than you might think.
Okay.
We're not just talking about massive apartment complexes,
Right.
It could be a duplex, a triplex, even like those fancy new buildings that you see like near train stations or near bus stations.
Oh, okay.
So the defining feature is really that there are multiple separate units, each housing like a different household.
I see. So it's not just about those big city apartment buildings.
No.
Okay, but even beyond like the variety of what multifamily housing is, like the scale of this market is just huge, right?
Absolutely enormous. We're talking about an asset class worth nearly $1 trillion.
Oh.
And over 100 million people in the U.S. rent their homes.
Wow.
That's a third of the entire population.
Yeah, that is a lot of renters. Like it's a much bigger market than I think most people realize.
Oh, for sure.
It makes you wonder, though, like, will those demographics shift? I mean, we talk about, the average homeowner is 55, right? And then the average first-time buyer is 33, so you've got that 22-year gap.
Yeah, that's a pretty significant gap.
And you wonder, okay, as those renters age, are they going to transition into homeownership?
Yeah, are they going to want to stay in multifamily, or will they want to move into a single-family home?
Right. And how does that impact the market? Like, how will those demographics shift over time?
It's a good question, a big question.
Yeah. But while we're on the topic of demographics, I thought Raymond made a really fascinating point about declining fertility rates in the U.S. and how that ties into housing choices. Can you elaborate on that a little bit?
Yeah, so, as families are getting smaller, the need for a really big suburban home decreases.
Right. Makes sense.
And so a 2- or 3-bedroom apartment or a condo might be perfectly adequate, even desirable for smaller families.
Yeah.
And this trend could lead to an even greater demand for multifamily units, especially ones that are designed for families.
That's definitely interesting. I hadn't thought about that long-term impact of, declining fertility rates, like how that impacts the housing market years down the line.
It's a fascinating trend to watch.
Yeah, it makes you think about what types of multifamily housing will be most in demand, 5 years from now, 10 years from now, as those demographics continue to evolve.
Absolutely.
Yeah, so let's switch gears a little bit and talk about something that's been top of mind for everyone lately, and that's rent versus buy.
Big one.
Huge. With interest rates going up, is it even worth buying a home these days?
Yeah, it's a question that so many people are asking and struggling with.
Right.
And, Raymond gave a really good example in the interview. He talked about, let's imagine a $1 million house.
Okay.
With today's interest rates, when you factor in taxes, insurance, maintenance, and even just the opportunity cost of your down payment owning that home, could it have costing you close to like $100,000 per year?
Wow.
Yeah, it's a hefty price tag.
It is.
So then the financial equation becomes, can you rent a comparable place for less than $100,000?
Right.
And in a lot of markets right now, you absolutely can.
So it really is like a financial tug of war, like trying to figure out okay, what makes more sense from a pure numbers perspective.
Yeah, and that's why we're seeing more people decide to rent, because it often just makes better financial sense right now.
But I imagine even with those financial considerations, it's not always a purely rational decision, right?
You're right. It's not. There are individual circumstances and personal preferences that weigh really heavily on this decision.
Right. Some people just crave the flexibility of renting.
Exactly.
Or some people are like, I don't want to be tied down to a mortgage and all of the responsibility that comes with homeownership.
For sure.
So it's really about figuring out what works for you and what aligns with your life goals.
Absolutely. Finding that right fit.
Yeah. Okay. So speaking of market trends, Raymond mentioned that rental rates have actually been softening a bit lately, particularly with new construction.
Oh, interesting.
Yeah. What do you think is driving that trend?
Well, there are a couple of things at play. For one, we've seen a surge in new construction in a lot of markets, so that creates more competition among landlords.
Oh, that makes sense, like supply and demand.
Exactly.
Okay.
And then also you see a lot of landlords offering concessions now.
Oh, like what kind of concessions?
Like a free month's rent or something to try to attract tenants.
Oh, wow. So they really are having to compete for renters now.
Oh, yeah, in this environment.
Interesting. But it sounds like renewals are still seeing some increases, so it's not like across the board rents are going down.
That's right. Renewals are going up a little bit, and I think that suggests that there is still a really healthy underlying demand from tenants who are already in place.
Right. They would rather just stay put than deal with the hassle of moving.
Yeah, exactly.
Okay, so speaking of new construction, I thought it was fascinating that Raymond highlighted the construction boom happening in the Smile States, the southeast to the southwest.
Right, right.
But then he also mentioned that construction in other regions, like the Northeast, for example, is kind of lagging behind.
Yeah, it's interesting how those regional variations play out.
Totally. And it makes you wonder, like, is that construction boom eventually going to lead to an oversupply of multifamily units in those Smile States, or is the demand strong enough to keep up?
Yeah, it's a good question, and it's going to vary from city to city.
Right, right. Okay, so this is where things get a little complicated.
Okay.
So we've got, strong occupancy rates. We've got this generally healthy rental market, but property values have actually been declining recently, and Raymond attributes that to those rising interest rates. So can you explain that connection for me? Because I'm having a little trouble wrapping my head around it.
Sure. So it really comes down to something called cap rates.
Okay.
And that's the cash flow return that you get on a property's cost.
Okay.
So cap rates have jumped from a low of 3 to 4% to 5 to 6% recently because of those rising interest rates.
Oh, so even though investors are still generating cash flow from these properties, those higher interest rates mean they need a higher return to make it worthwhile.
Exactly.
Okay, that's a delicate balancing act.
It is.
Okay, so now there's another piece of the puzzle that I found really intriguing, and that's these government-sponsored entities, or GSEs. What role are they playing in all of this?
Okay, this is where things get really interesting.
Okay, I'm ready.
Fannie Mae and Freddie Mac are big players in the multifamily housing market, and they provide financing at significantly lower rates than you would typically find with a commercial bank.
Oh, wow. So individuals can access these lower-cost loans through their lenders.
Yeah, that's the surprising part.
I always thought that was just for, big institutions.
It's available to individuals, and it really reflects a core government objective, which is to ensure access to affordable housing.
That's amazing. Why is the government so involved in this particular market?
Well, because safe and affordable housing is essential. It's not just for, personal well-being, but for societal stability.
Right. If people don't have a place to live, that's a problem for everyone.
Exactly. And so by encouraging investment in multifamily housing, the government is trying to support the development and availability of affordable options.
That makes sense. So those lower interest rates must make a huge difference for investors, right?
Absolutely. We're talking about potentially securing a loan at a rate that's several hundred basis points lower than a commercial mortgage.
Hold on, back up basis points. What are basis points?
Oh, sorry. A basis point is just 1/100th of a percentage point.
Okay.
So several hundred basis points lower is a significant amount of savings.
Right. Okay. Yeah, that makes more sense. So those GSE-backed loans really do seem like a game changer for individuals looking to get into the multifamily market.
They can be.
But how can someone like me actually invest in multifamily housing? What are my options?
There are two main avenues you can go down. One is publicly traded REITs. Those are real estate investment trusts.
Okay, and those are kind of like stocks, right?
Exactly. You can buy and sell shares on the stock market.
Got it.
They offer a lot of liquidity and transparency.
So that's probably a good option for someone who wants a little bit more flexibility and the ability to, adjust their investment as needed.
For sure.
Okay, what's the other option?
The other option is private equity funds, and these typically offer higher potential returns.
Okay.
But there's less liquidity. You become a limited partner in a fund that pools money from investors to buy and manage properties.
So it's kind of like the classic trade-off, like liquidity versus potential return.
Exactly. You have to weigh those factors and see what aligns with your goals.
Right. Okay, so before we move on to some of the challenges in the multifamily market, I wanted to touch on something that Raymond mentioned briefly, which is the unique situation in New York City. What makes that market so different?
New York City is fascinating because it really shows the challenges that a lot of cities face. So you have incredibly high demand, very limited supply, and then you add in these really complex rent stabilization policies, and it just creates this incredibly unique market dynamic.
So it's like a microcosm of the broader affordability issues that we see in big cities all over the world.
Yeah, exactly.
Are there any solutions that are being explored to address these challenges in places like New York?
So the city's trying to encourage more development.
Okay.
And some of these solutions are really innovative, like converting existing office buildings into residential units.
Oh, wow. So they're really thinking outside the box.
Yeah, because there's such limited space in New York, they have to get creative.
Totally. It makes you wonder how these innovations will shape the future of multifamily housing. Not just in New York, but in other cities that are facing similar pressures.
It's a big question for sure.
Okay, so we've covered a lot of ground today, from the types of multifamily housing to the financial considerations of investing. What are some of the key takeaways you want listeners to walk away with from this deep dive so far?
I think the big takeaway is that this market is much more dynamic and nuanced than a lot of people realize. It's not just about finding a place to live. It's this complex ecosystem that's influenced by demographics, interest rates, government policies, local zoning regulations. All these things are playing a part.
Yeah, it's about understanding those interconnected forces and how they shape not just individual investment decisions, but the broader landscape of housing and communities.
Absolutely.
But I'm sure there's still so much more to uncover about this fascinating market. So we're going to take a deeper dive into some of the challenges and opportunities and misconceptions surrounding multifamily investing when we come back after the break.
Sounds good. I'm ready.
So before the break, we were talking about, the scale of the multifamily housing market and some of the demographic and economic trends that are kind of shaping it. But now I kind of want to shift gears and talk about investing.
Okay, yeah.
Because I got to admit, when I think of investments, I usually think about like stocks or bonds.
Right, the traditional stuff.
Yeah, like not real estate. So multifamily housing as an investment, that's not something that's like top of mind for me.
Yeah, that's understandable. I think a lot of people overlook real estate.
Yeah.
Particularly multifamily as an investment. But as we've seen, it can be a really powerful tool for building wealth, especially when you consider things like those GSE-backed loans.
Right. That was like a light bulb moment for me. Like, whoa, those government-sponsored entities are actually accessible to individual investors like me.
It's a big deal.
It's huge. Yeah. So it's definitely something to think about, if you're trying to diversify your portfolio beyond just the typical stocks and bonds.
For sure.
And it's interesting, too, because, when we talk about multifamily housing, we tend to picture like those big apartment complexes.
Right.
But there's really a whole spectrum of multifamily properties
there.
You've got those charming duplexes and triplexes.
Yeah, the brownstones.
Yeah. And then you've got like the modern, new construction buildings that are popping up around transit hubs.
Exactly.
So there really is something for everyone.
There is. It's a diverse market.
And it makes you realize that if you're thinking about investing in multifamily, you really need to think about like who is your target renter and what kind of property is going to appeal to them.
That's a really good point.
And I imagine location plays a huge role in that decision too.
Location, location, location. That's the mantra.
Right. So properties near public transportation.
Yeah, good schools.
Yeah, thriving commercial districts. Those are all going to be more attractive to renters.
Exactly. And that drives up property values and rental income.
So it's not just about picking a pretty building. You have to really understand the community and the neighborhood.
Absolutely. You're investing in a place, not just a structure.
Right, right. Okay, so you got the location, but then you also need to think about the condition of the property itself.
Oh, for sure.
Like a rundown building is not going to attract many tenants, no matter how great the location is.
It's true. You need to make sure it's well maintained.
Yeah, so I guess like those shiny new builds might be tempting, but those also come with a pretty hefty price tag.
They do.
So maybe there's more value to be found in an older property that has good bones and maybe just needs a little bit of TLC.
That's where your investor's eye comes in,
Right.
You got to balance the potential rewards with the risks and be realistic about those renovation costs.
Right, because renovations can get really expensive.
Oh, yeah, they can spiral out of control.
And that brings us to the number side of things. Like, I imagine the financial analysis can get pretty complex when it comes to these multifamily properties.
It definitely requires some attention to detail.
Okay, so walk me through it. What are some of the things that investors need to be thinking about?
So you're going to analyze the property's income and expenses.
Okay.
So that includes rent rolls, operating costs,
Okay.
potential vacancy rates, all that good stuff.
Right, so it's not just about how much rent you can charge. You need to really understand the financial health of the property.
Absolutely.
And I guess that's where those GSE-backed loans can really come into play.
They can make a huge difference.
Yeah, lower interest rates mean lower monthly mortgage payments.
Right.
Which can really boost your cash flow.
Exactly.
Okay, so it sounds like it's a win-win situation for both investors and renters.
In many cases, it can be.
Okay. But even with like the best financing and a really promising property, there's another piece of the puzzle that I think is often overlooked, and that's the management team.
Oh, yeah, that's crucial.
Like if you're not planning on managing the property yourself, you need a really reliable and experienced property manager.
You absolutely do.
And what exactly does a property manager do?
They handle everything: tenant screening, rent collection, maintenance requests, property upkeep. They're your boots on the ground.
Wow, it sounds like a very demanding job.
It can be.
But a good property manager can make all the difference.
They can make or break your investment.
So it really is a true partnership. Like, you need someone you can trust to manage the day-to-day while you focus on the bigger picture.
Yeah, it's a team effort.
Okay, so we've been talking a lot about the potential of multifamily investing, but I'm kind of curious, what are some of the misconceptions that people have about this market?
Oh, there are a lot of misconceptions.
Okay, like what?
Well, one of the biggest ones is that it's only for the super rich.
Okay, I could see how people would think that.
You imagine these big real estate tycoons. But the reality is that with these GSE-backed loans,
Right.
it can be accessible to people with a range of budgets.
So you don't have to be like a millionaire to get started.
Not at all. You can start small.
Okay, what's another misconception?
Another one is that it's a passive investment.
Okay.
And while you can hire a property manager to handle the day-to-day stuff, successful multifamily investing does require active involvement.
Oh, so you can't just like set it and forget it?
Not really, especially in the beginning.
Okay.
You need to do your due diligence. You need to research properties, understand the market, build relationships with good professionals.
So it really is a business just like any other.
Exactly. It takes work.
What's another misconception?
Okay, last one. A lot of people think that multifamily investing is just about quick profits, flipping properties.
Right, right.
But a lot of investors see multifamily housing as a long-term wealth-building strategy.
Okay.
They'll hold properties for years, sometimes decades, generating consistent cash flow and benefiting from appreciation over time.
Right, so it's about playing the long game.
Exactly, building a solid foundation.
And I love that it's not just about personal gain. Like multifamily investing has this ripple effect that goes way beyond the individual investor.
It does. It really does.
How? So
Well, when people have access to safe and affordable housing, it creates a more stable and thriving community.
that's true.
It contributes to economic growth. It improves quality of life.
It can really revitalize neighborhoods.
It can, and it fosters this sense of belonging. So in a way, investing in multifamily housing is also investing in the well-being of your community.
It's about building something bigger than just bricks and mortar.
Absolutely. It's about contributing to the fabric of a neighborhood, creating opportunities for people.
Yeah, leaving a positive legacy.
Exactly. That's a great way to put it.
Okay, so we've talked a lot about the potential, but now I'm curious, what are some of the biggest challenges facing the multifamily market right now? Like, what are some of the obstacles that investors and community need to navigate?
Yeah.
So we were talking about, some of the misconceptions surrounding multifamily investing and how it can be a powerful tool for building wealth, but also strengthening communities.
Right.
But like any market, there are challenges that need to be considered. So what are some of the biggest hurdles facing the multifamily housing market right now?
Well, one of the most pressing challenges is affordability.
Yeah.
We've talked about rising interest rates and construction costs and how those things have really driven up rents in a lot of places.
Right.
And it's made it a lot harder for people to find decent housing that they can actually afford.
Yeah, that's a concern that I hear all the time, especially in those popular urban areas where demand just seems to constantly outpace supply.
Exactly. And it's not just an urban issue either.
Oh, really?
Affordability is a growing challenge in suburban and rural areas as well.
Wow, so this is really like a widespread problem.
It is. It's a complex problem that's going to require some really creative solutions.
So what are some of those potential solutions? Like, what can be done to address this affordability crisis?
Well, there's no easy fix, but one approach is to encourage the development of more affordable housing units.
Okay, how do we do that?
Well, you could offer incentives or tax breaks to developers who are willing to prioritize that type of construction.
Right, so kind of make it more financially attractive for them to build those types of units.
Exactly. Give them a reason to do it.
Okay, but incentivizing developers is only part of the solution. What are some other strategies that could help?
Well, another approach is to look at zoning regulations and building codes,
Okay.
because sometimes those regulations can actually hinder the development of smaller, more affordable multifamily units.
Oh, interesting.
So if you streamline those processes and encourage more innovative housing designs,
Right.
that could help increase the supply of affordable options.
So it sounds like we need a little more flexibility and creativity in how we approach housing development.
We do. We have to be willing to think outside the box.
Okay, so beyond affordability, what are some of the other challenges facing this market?
Well, another challenge is the environmental impact.
Oh, right.
As we build more housing, we need to be mindful of sustainability, energy efficiency, responsible land use.
Right, because we can't just build our way out of this problem without considering the consequences.
Exactly. It's all about finding that balance between meeting our housing needs
Right.
and protecting the environment.
Yeah, and it's not just about doing what's right for the planet, those sustainable building practices can actually be financially beneficial as well.
They can. Green buildings might have higher upfront costs, but they often have lower operating expenses.
Oh, interesting.
And they tend to attract tenants who are willing to pay a little bit more for those eco-friendly features.
Right, so it's a win-win for everyone.
It is. It's about that triple bottom line, people, planet, and profit.
I love that concept.
Yeah, creating value for all stakeholders.
Okay, so it brings us back to that big question that we posed earlier. What will the multifamily housing landscape look like in 5 years, 10 years down the line?
Right.
What trends should investors and communities be paying attention to?
Well, we can't predict the future with certainty.
Of course.
But we can look at current trends and make some educated guesses.
Yeah.
I think we're likely to see a rise in smaller, more efficient units as demographics shift and people's preferences change.
Okay.
And technology is going to play an even bigger role in property management, tenant services, even building design.
Oh, yeah. It's fascinating to think about how technology is going to shape the future of housing. Will we see smart apartments that, anticipate our needs?
Maybe.
Or buildings that generate their own energy?
It's possible.
The possibilities seem endless.
They do, and I think as we continue to deal with the affordability crisis, we're going to see more and more creative solutions.
Okay.
Things like innovative financing models, co-living arrangements, repurposing existing structures.
Right, right.
I think the key is to just stay adaptable and open to new ideas.
Be willing to experiment.
Yeah, exactly.
So the multifamily housing market is anything but static.
Well, it's incredibly dynamic.
It's constantly evolving in response to, these changing needs and priorities.
And that makes it challenging, but also really exciting.
Yeah, for sure. It's a reminder that housing is so much more than just shelter.
It is.
It's this fundamental human need that shapes our lives, our communities, our future.
Well said.
Well, this has been a really insightful deep dive into the multifamily housing market.
I've enjoyed it.
Thank you so much for sharing your expertise with us today.
My pleasure.
And to our listeners, we hope this deep dive has given you a new perspective on the world of multifamily housing. Whether you're a potential investor or just someone who's trying to navigate the rental market, or maybe you're just fascinated by these forces that shape our communities, we encourage you to keep exploring this dynamic and ever-evolving market. And join us again next time for another deep dive, where we'll uncover even more hidden trends and surprising insights behind the topics that matter most to you.